Good morning everyone and welcome to today's Trading European Open live here at the Live Trade Room. And today now is Tuesday the 11th of September. So without further ado then, there's an interesting move currently being set up, so I'm looking to get straight into the markets. If we can start, as we always do, with a risk warning, please do familiarise yourselves with the risks involved in trading these financial markets and take note of our risk warning currently up on screen. Now, we trade the markets, we look for high probability trading opportunities, and we have a methodology that we use to identify these high probability opportunities. Then we need to execute with a certain degree of consistency in our approach, and really look to cut our losers short effectively when we're looking to manage these trades, but looking to let our winners run. And that's where the patience come into trading these markets, all with one aim, and that is to book in consistent returns. Okay, so just before we get into the charts then, I'd like to do a quick review of potential market moving news. So for this, we get up Forex Factory, and as we scroll down we can see we've got some significant British pound news at 9:30, and we're talking about average earnings index, and it's a quarterly figure, and it's expected to, the forecast on the price, that is the percentage that's built into the current price of the British pound is 2.4%. So a strong deviation on that number could mean a bit of volatility for the British pound, and we had got a couple of minor sort of medium impact news events as well. So I'd like to come back to this news event at 9:30 and see if we can capitalize on some moves. So getting straight into the charts then, so yesterday we had Barnier, the European negotiator for Brexit, basically came out with a news event which suggested that the Brexit deal could effectively be facilitated within the next 6 to 8 weeks, and I think he used the word reasonably. So so that extended or that created a pretty significant move yesterday in the British pound. I'll just show you. So there's the move there on a shorter term time frame in a 15 to 20 minute explosive move, roughly from the 29.39 right up to the high of the 30.50 level. So a decent move in a relatively short period of time. So we're talking about 110 pips or so in a relatively short period of time, and then we've drifted sideways. Now what's quite interesting to see is that we've had a little bit of a move to the upside, which has now is in the process of retracing a little bit. We know we have the 30.43 from yesterday, so really it's looking at this kind of range in here now, and we're kind of straddling this particular price. In fact, I might bring this down just a little bit because it coincides with other sort of peaks in this market. So so as long as we're above this 30.43 level, we're looking for opportunities to buy. And we're kind of at that level as things stand. Just the reason why we're looking at this trade so carefully is we've effectively got a structural failure in the pound dollar, and there's a bit of a mixed picture as things currently stand for the pound. So we are looking at this market, and we do like this price, this market above the high of the 30th of August. We're currently above that level now. 30.43 is the level we're looking for, and we are currently above that level. So going into this market on a shorter term time frame, there's a bit of looking at this bit of price action. So we could argue that this level is very likely to hold. We do have the 30.50 level that could provide a little bit of support in this level, and we're going to go ahead and take this this trade at this price point. So let's go ahead and buy this level. And what we can do with this is basically put in a relatively small stop loss. So we're talking about less than 5 from 10 pips. Let me see exactly. So we're talking about a 9 pip exposure. So what we want this market to do now is to extend to the upside. So it's looking like we're getting a little bit of the move, but clearly it's a little bit erratic as well, isn't it? So we're taking a relatively small scalp type trade to see if we can get a break above these levels, and we've got a really small stop loss in this market. So what we do need to do is break above the 30.61. Otherwise, this level here, the 30.47, becomes a little bit of a strong structural failure back to the downside. So we're trading the market for the right reasons. We have a structural failure to trade to the upside, plus a major news event yesterday. Very likely to see continuation. Those of our traders that was able to see our daily trade watch video will know a break above the 30.47 is a high probability trading opportunity. Then it's a case of looking for the opportunities as they unfold, and obviously be quite controlled and considered with regards to your risk on this trade. So we come back to the news event at 9:30. And we'll see if we get a little bit of an extended move to the upside. So that's what we're... Let me get up my pen just for a moment. So we got into one of the high probability trades that we're looking to trade. So this level in here becomes really important. We've had a bounce off the low. So this market has kind of moved from actually being quite bearish to now potentially this is the area that we'd be identifying and see an expected a little bounce anyway to the upside. So that's the level in which we're getting into, which is exactly the kind of price roughly that we would like to be in this market. So we have the bigger time frames supporting the trade, which is kind of an important aspect of trading these markets. So let's see if we get, hopefully we've got a bit of support for price in and around the 30.50 level. We've got in at the 30.54 and we have a stop loss at the 30.45 level. So only a 9 pip stop loss in this trade. Okay, so so please do use your chat box. I just posted into the chat box there, and if you do have any questions or anything, please do feel free to let us know. Yesterday, a bit of a frustrating day in the market. Not really an awful lot going on apart from a really short, sharp move in the British pound. And as we were looking to get into it, the market started to just come off its highs and consolidate for the remainder of the day. So it's just one of those events that you just want to accept, and you don't really want to be in it anyway. So okay, so that's the pound dollar then, just literally moving sideways. Obviously has a bit of a bullish biasness to the upside. We are still above the 30.50 level. Now the next level, or the level of interest for us, is actually a close above the 30.59. So we're a couple of pips away. Hopefully we get that close above that level, and we get a nice move to the upside, hopefully, in the pound dollar. So definitely one to monitor. Let's look elsewhere and see what opportunities exist. We're getting a bit of strength coming into the euro. The picture isn't as great, or isn't as easy to identify as the pound. We've had a nice little break above yesterday's highs in the dollar yen. But we've got this mixed dollar picture at the moment. So the dollar is strengthening against some markets and it's weakening against others. So the CAD. So there's signs really that the dollar is selling off across the euro, the pound, the Swiss, the CAD. As you can see, a break below yesterday's sort of indecisive candlestick. Aussie dollar strengthening against the US dollar, and the New Zealand is strengthening as well. So we were very dubious about continuation to the downside in these markets, although that's the prevailing trend. But we're currently experiencing a little bit of a pullback. So really, we're trading with the majority of the dollar pairs, which is seeing a little bit of dollar weakness. Now, an interesting market has been the really strong move we've seen in the yen. So again, in today's daily trade watch through the live trade room, you'll know that we've identified these levels, the 145.02 as our first entry point, and the second entry point is the 145.68. So the reason for that is we were likely to potentially come across a little bit of resistance between these two levels, but if we break the 105.02 and it gives you a really clean cut entry in this market, and you can see that we've had this move over the course of the Asian session. One really strong move, bit of sideways, and then an additional move probably an hour and a half ago. So not an awful lot we can do about that, but what we can do is look to work with the next level to the upside, and it's only just above these levels. In fact, it's so marginal, we could continue to look for a good opportunity in this market as well. So I'm just going to take note of these levels. And let's see if we do get that move to the upside. So today could be an interesting trade looking at the pound. So I'd like to come back to this market as well and see if we get a little breakout trade. What I might do is switch down to the 1 minute chart. Okay, so really we're looking for a close above the 145.59, and if we get that close above this level, we will look to get into this market as well. So there we go. So let's see if prices can hold at this level. We'll just prepare our trade size, so we know already exactly what sort of size we're looking to trade for this market, and we do have. It's a slightly longer stop loss than we would ordinarily like, but I guess it would be effectively the safer place to place this trade. So this is likely to close now in just a few seconds, and we'll see if we get continuation in that market. So the reason why the confirmation we look for when we trade is to get a close above this level, and that just means that there's a commitment to the commitment of others is to push prices higher. Now sometimes if this pulls all the way back below the 145.59, then we effectively look to stay out of it. So it's kind of the final decision that needs to be made, whether it's trade one more click higher and we're in. So it's one of these situations where we want to see the close. Right, let's get into this market then. So there's our entry price. So we're getting a nice, strong, explosive move in the pound. So a nice strong move. We'd expect continuation to the upside. Let's see if we do get that opportunity to break new highs in this market. So we're looking at both of these markets on minute time frames. Really strong market, and obviously we're getting a bit of a pullback in this market. So no need to panic just yet. We'd expect this market to continue to push above these levels. So we'll see if we get that next push to the upside. Well, if there's a news event that may be supporting the extended move in the British pound. So now we're in the significant position where we can manage these trades relatively effectively. We do not need to expose the capital that we're currently exposing in this market, so we can bring this up to this low here, just so we can mitigate the risk on this trade to a 2-pip stop loss straight away. We're going to get probably an aggressive pullback, so let's see where this market pulls back to. Right, not quite in a position yet to sort of mitigate risk on the pound yen, but we've got every chance we'll get continuation to the upside. And if that's the case, then of course we'll bring up our stop loss. So the risk is slightly larger in the yen. So looking at a 15-pip stop loss in the yen, a pound yen should I say, and the fact that we are technical traders means that we can get into these for technical reasons, but clearly there's a bit of a support in price. There's a bit of a boost to the upside in these markets, and we can always find out after the fact what the reason for the move is. I suppose this is like a 30, effectively a 25 to 30 pip move in both of these markets. So we can always find out the reasons for that move at a later date. So let's see what momentum. We're trading these markets in the right direction. We've obviously got the big impulsive move to the upside. We're currently experiencing a little bit of a pullback. So let's see now if we do extend to the upside. So the EU says a deal is within reach, but May's fiercest battles still come from home. There certainly seems to be a bit of a change on the rhetoric that's coming out of Europe, just with regards to facilitating the UK's position. It seems to be very positive for a soft Brexit. So be interesting to see how it all starts to play out. I'm sure it can't come quick enough for Theresa May. I don't really have any . there's plenty of scope to the upside in these markets, so there's really no need to be too panicky about this move. Both of these markets can extend higher. Probably the pound can extend the highest. We're just now getting this little break. Nice small daily candlestick. This market could easily squeeze to the upside. So hopefully we've got a couple of trades. The reason why I wanted to jump straight into the pound was because we were getting the setups as we were approaching our trading desk. So it's just important for us to get into these at a slightly earlier stage. So what we can do now with both of these markets is look at these on a 5-minute candlestick. It just gives us a little bit more to work with. So as you can see, we've got a 5-minute explosive move followed by a 5-minute pullback. So just looking at the pound yen, both of the levels that we were discussing in our daily trade watch video have been breached quite nicely, actually, without much resistance at all. And as you can see, we're now in above the high of the 30th of August, and our stop loss is below that level. So it's currently pulling back, very likely to extend. So if we get that extension, we'll look to book in that profit on that trade. Two nice back-to-back healthy candlesticks, and we might see some continuation over the shorter term in the British pound. So let's look at it on the 5-minute chart. So now our attention focuses. We've gone through our ability to identify those trades. Hopefully that stacks up and makes some sense. Then we have to go through a process to execute. So we used genuine support and resistance levels to identify on smaller time frames, to identify or to be able to execute trades in these markets. And now our focus shifts to our ability to manage the trade. And there's plenty of scope to the upside. So we kind of need to practice a bit of patience really now that we're potentially focusing on the profit side. We've mitigated risk, certainly on the pound dollar. So worst case scenario, if this rolled back over to the downside, we're exposing 2 pips. It's a 2 pip risk. So very comfortable with that. Plus, if this makes a bit of a structural low and we start breaking these new highs, then we can book in profit on this move at an earlier stage. So we're getting this market just creeping higher again now. So, I mean, if you ask me at what point would this market, is this market likely to pull back to, it would certainly be kind of within this range. That's what we'd expect. The same situation in here for this is the level. Now we still have our stop loss significantly below this level, as you can see on both of these trades. So we obviously don't want a complete reversal of these highs on a 5-minute chart, even though we're pulling back now. So as long as it pulls back into this range, we're okay. We obviously got a really explosive move very, very quickly, and I wonder if that is news related. I'm sure we'll find out pretty shortly. Okay. So now we can manage the trade on a 5-minute time frame. We can take a slightly bigger picture, not get sucked in too much to the smaller time frames, and allow this picture to just unfold and develop. And let's see the close of this market now in a few seconds. Oh, sorry, this 5-minute candlestick on each of these markets. So hopefully this is a couple of good trades to monitor. What I'm going to do just while these trades are unfolding, just like to look at a couple of other charts. So we're getting a bit of European strength against the US dollar. However, the dollar is strengthening against the yen. The slightly better trade effectively would be the pound yen over and above the pound dollar. The problem is most of the move has already occurred in the pound yen, so we do want to sort of try to take that on board. Dollar Swiss just rolling over to the downside, so a bit of Swiss strength coming back into that market. Same for the Canadian dollar, same for the Aussie dollar and the New Zealand dollar. So really there's a bit of a dollar weakness story, a dollar and yen weakness story today, and we're looking to trade actually dollar weakness and yen weakness, and that is coupled with pound strength, which we've seen from yesterday afternoon onwards. So we've got our ducks lined up in a row effectively, which is exactly the kind of conditions that we wait very, very patiently for. Markets like yesterday, we're not too anxious to be jumping in and out of really choppy, sideways moving markets that don't really give you strong signals. So we'd much prefer to trade, obviously, conditions like we're experiencing today. Now, the euro is still stronger than the pound as things stand. So I suppose it just shows you the potential for the dollar and yen weakness, which is effectively what we're trading. A good strong move today, but as you can see, it's just a pullback off the lows, whereas the reason for this trade here in the pound yen is very much down to a structural failure to the upside. And I'll show you what that looks like on a daily time frame. Breaking above this high, pullback, failed to make a new low, and extending, breaking that high to the upside, and we're now inside our descending level as well. So so we'd expect these markets to continue higher. I'm very conscious we do have a news event at 9:30, so we shall certainly see how price unfolds between now and then. So we will have a plan to deal with the pound going into that news event. It may be the case that we take profit with a view of looking to get back into it again if we start seeing the pound strengthen even further. So got a couple of options available to us for that, so hopefully you can bear with us for that one. So conducting the rest of the review, the gold market, a bit of strength, bit of consolidation, as you can see, over a few days. Nothing major. We're still below this descending level, and we were able to take a bit of risk off the table last night as well in our capital growth webinar. For those of you interested in trading daily time frames, we spend 30 minutes every evening where we actively trade the markets on daily time frames. So obviously not everyone can spend 3, 4, 5 hours a day trading these markets. Quite time consuming, so we do have enough a method that people can adopt and embrace, still trade the financial markets, but obviously just commit a very, very small period of time. So do go to a website for that if you'd like to check out our capital growth webinar. I suppose to compare and contrast, The capital growth webinar is about building capital over a medium and longer term period, lower risk, and as a result, lower returns. So with day trading, you're actually trading for short term moves in these markets. So your risk levels are higher, but of course your return is higher as well. So it's they work very, very well together. US oil is just creating a bit of a support around this level. Maybe this is the next leg to the upside. We'll have to wait and see. Bit unclear as things stand now. Getting a bit of a move in the UK oil market, in the Brent oil. However, the price action over the last 2 or 3 days doesn't really fill us with that much confidence. Some strength coming into the S&P 500. We'll see if we break above yesterday's high, the 27.87. We're not too sure if that's the case or not. We shall certainly wait and see. The US 30 just rolling over to the downside. We do have this weekly low in here, the 25.805. We're currently above that level. So if we get a break up to the downside, it could be a viable opportunity for us. The FTSE, although the... sorry, that's not the FTSE, that is the NASDAQ. Potentially a breakout above the high of 2 days ago, the 74.90. If some strength starts coming back into these US equities, then of course we will look to maybe look to buy this market. So a bit of a mixed bag. We're getting the FTSE market just extending lower, and we would expect this market to continue lower. However, it is correlated with the British pound. So if the British pound moves to the upside, you're likely to see this market move to the downside. So of course, please do be aware of that correlation. So a bit of a mixed bag really as far as the equities are concerned. So going back to these trades, we'll put these two markets. So the levels that we need to sort of focus on in terms of what this market decides to do. Would be to just take note of these highs up here. So we really want prices to break the 145.85 to the upside, and we'd want to break the 145.91 as well. So there's only a 6 pip difference, which is nothing at all, and we do want to see these prices just close above those levels. So there's still appetite to push these prices higher. Now it's going to be interesting to see whether we get some selling going into this news event, or whether we get some strength going into the news event. I suppose if we get some selling coming into that news event, it might be worth keeping them, and if we get some strength going into that news event, it might be worth taking profit. The reason why we say that is often you can get moves going into these news events, and it's just getting a feel for the market in terms of how it's unfolding. And these are some of the finer nuances, really, I guess, that you'll start to learn and to pick up on. So, of course, we want these markets to start breaking these new highs sooner rather than later. We're only 20 pips off the high here for the pound dollar. So, and I suppose the highs, yeah, so 20 pips on each of these markets. So allow the markets to just unfold, just unravel a little bit, and we'll start to see if we get some strength coming in or not. So we just need to be super patient with this, and I've just got one eye on the clock just to see what's happening to price going into that news event. So hopefully we'll have some interesting trading conditions. and some interesting decisions to make. If you guys have any markets that you'd like us to look at, we're obviously firmly focusing on the pound dollar and the pound yen, just because right now they're giving us the best opportunities to trade. If you're interested in trading any other markets, do let me know. Happy to look into it and give you a bit of support with it if you need. Just from our perspective, from a analysis perspective, sometimes having someone to bounce a trade idea off is quite a useful. It's quite a useful thing. So yeah, do feel free to use your chat box. So I hope we don't see what we saw yesterday, which was a pretty significant move to the upside. Short-term move, pretty excessive, and then spend the rest of the day in a ridiculously tight range, moving sideways. So hopefully not. So then we've started to get, I suppose, the next move to the upside, which is often what you see with consolidation. And we're obviously getting a bit of a pullback as things stand. This is on a 15-minute time frame, so it looks like there's a bit of short-term selling coming into this market. So we'll just have to kind of wait and see, really. So we're at such an early stage in the trading day for the pound dollar. Looking at this daily candlestick, we're very likely to get extension above these highs today. Very likely, and that's all we really want to do, is to trade probabilities, just stack the probabilities in our favor, and see if we can let these winners run. Certainly been, you know, the last week or so, we've only had one or two opportunities to actually do that, which is unusual. So when those opportunities do arise, it's important to try and obviously capitalize on them as best we possibly can. So currently getting a pullback off these levels. Okay, there's not an awful lot else to really focus on for the session, I guess. We're currently in these trades. So we're in this pullback phase of these two markets. The reason why we can't get too sucked into it is because I'm sure you'll just see, but every market does that. So we never get a market moving in a linear fashion. We always have to experience the pullbacks. So it's part and parcel of trading these markets. Now there's nice pullbacks and then there's not very nice ones. Like I said, we'd expect this market to pull back to this kind of level. We want it to pull back because once we get the pullback, it gives more energy. If you can imagine it from a trade psychology or a market perspective, the market looking at this price action could see this price action here and think, right, well, this is another opportunity to get into this to the upside. And that's what you can find with these pullbacks, is it provides a little bit more volatility to push prices higher. Plus, it might give us an opportunity to get into it at a slightly lower price. But the entry price, if we did get into this, would be above our current entry. But we could reduce the risk on the trade and look to take this market again, but only if we get the conditions that we ordinarily like. So this is fine. You know, this could effectively build a bit of a floor around this level, like we've seen here before we got the explosive move to the upside. Is this the beginning of that same sort of pattern again? Very likely. You know, certainly no need to panic with the trade just yet. We're currently experiencing a pullback, a significant pullback, but we're still only sort of 23 pips away from the high, so we can retrace that very, very quickly indeed. So so far we're just experiencing a pullback to the downside. So we'll see how we get on with these trades. Certainly no panic or no So we've got a little bit of risk exposure in these two trades, but very little, nothing of any major concern. So all we're doing is experiencing a bit of a pullback, hopefully before the next leg to the upside, and we'd expect both of these markets to make new highs. It doesn't need to do so anytime soon. It can do it whenever it wants to do it. There's no pressure on our side in terms of this needing to happen in the next 10 minutes necessarily. But still, the likelihood is we'll be breaking new highs at some point over the course of the trading day. We obviously just need the markets to follow through on that. So what we want to happen here, and we've got the basic structure for it, is a bit of a support in price. And if you get this floor being built, then it just puts a bit of doubt in the minds of those selling these markets. So if we've just pulled back to this low and price has really failed to sort of break this level, and even if we procrastinate for quite a while, not a major problem for us. Same situation here. If this is the pullback from the high and it creates a bit of a floor at this level, then that's obviously quite a good thing for us. So give it plenty of time. This is all okay. There's nothing really wrong here. I suppose it becomes a different situation if we start to extend a move higher and then we get sort of this break to the downside. That's a situation which is not so good. Same situation for the pound yen. But right now things are absolutely fine. They're okay. We want to try and let these winners run. That's the important part. We don't want to necessarily like meddle with them. We want to give them time to evolve. And hopefully that's what's going to unfold. But we'll trade the conditions. We'll trade what we see. Okay, so hopefully a little bit of strength coming into this market as things stand. Hopefully we have a little bit of a floor just being created off this level. So the 145.68 actually corresponds to a daily high back over here on the 30th. Yeah, 145.68. So that's likely to provide some support, pushing this price higher. So that's why that level is of some importance. So if price is being held up above that level, then that's obviously a really good thing for the pound yen. So far so good on the pound yen, and this level in here, this high 30.63, and the low is the 30.62. So we're now back to support levels. So let's see if a floor is created at this price point and we start seeing a little bit of strength. It doesn't look like it's coming into it just yet. So there seems to be selling continuing to just drive prices lower. So you'll see the difference between this kind of price action and the price action that starts to kick in when some buyers really start to enter this market. And hopefully we'll get another attempt, certainly up this high here, the 30.86. We'll see if we get that opportunity or not. But right now the psychology of this trade is that the sellers are kind of in control, and I suppose it's making it a nervy trade for buyers. So at what point will the majority of the buyers give up the trade and think, right, well, we're just now pulling back, because normally at that point you'll start seeing some buying start to flood into this market. So I think just a little bit of patience is required. As long as these floors are stacking up, and we're supporting prices around these lows, then it's all okay. Just allow it to do what it needs to do, and if you get this break to the upside at 8 o'clock, it's in the morning, sorry, during the European session, you're very likely to get at least another move above that level. Of course, the markets do not need to conform to that on any given day. Of course they don't. Just from a consistency perspective, and obviously having traded these markets for, on a personal level, 10, 12 years, as far as my colleagues are concerned, you could add another 30 odd years onto that in terms of experience. So we've seen all of these situations occur on a large scale. So we kind of we understand the finer nuances of some of these markets, and as long as we trade support and resistance, and as long as floors and ceilings stack up for us, we're quite happy to work with these levels and to give some trades a bit of room, really, which is effectively what I was saying. So that is definitely what is required. The floor in the pound yen is obviously a little bit more solid than the low that we've just seen here. We're likely to probably break through that level, but there's a lot of resistance running into this market around this level. So no need to panic in any way, shape or form. We're just getting a pullback off the highs as things stand. So again, if this becomes a bit of a floor, we're likely to get this move sort of continue higher, but I suppose the magic word is likely. So from a percentage perspective, we're likely to push higher, and there's obviously no guarantees that will happen. So we're getting a strong pullback in the pound still, again, which is absolutely fine. And if you can get a few more rejections of these lows, then that's even better. That's when the sellers will start to question the potential for this market to push any lower, and at that point hopefully buyers will come in and you'll start seeing a big flush to the upside. Okay, so we can absolutely give these Let me see. Okay, so what we're actually seeing here is a bit of a flaw being created in the market, which is exactly what we wanted to see. We want to see these levels really be supportive, and now we're wanting to see, hopefully, with a little bit of a pullback, an opportunity for this price to start regaining its upside momentum. So we could constitute this as kind of a strong pullback off the highs. Now it just remains to be seen what will happen next to this market. What would be a little bit more concerning is if we break these lows to the downside, then that becomes a bit more of a structural failure to the downside. So we obviously don't want to really see that if we can possibly avoid it. So guys, I apologize, I'm just conscious of the time. We do have our traders at the live trade room over at the live trade room as things stand. So I'm going to have to switch trade rooms. We're going to continue to manage these trades and see what, if we start making new highs, we'll see if we can really run these trades over the course of the day. So what I'm going to do is I'm going to switch the rooms. If any of you would like to join us, you're very, very welcome to do so. There's the link below. Do have a look in the descriptions tab. You can join us for 2 weeks completely free of charge. And then if you do decide to join us, there's only a very, very small fee of $9.99 per calendar month, which we hope you will benefit hugely from. So feel free to join us if you can. You do get instant access, so we do hope to see you over in the live trade room. And apologies, we do have to switch across right now, so we come back to these trades very, very shortly. So from everyone here at the Live Trade Room, just to let you know, you can connect with us. Please do obviously give us a thumbs up if you possibly can. Subscribe to the channel if you've not already done so, and click the bell function as well. You'll be notified when we do go live. And you can also connect with us through Facebook, Instagram, Twitter, and LinkedIn. The details are up on screen. And thank you very much for joining us. Do take care, and we look forward to seeing you next time. Bye for now.